Hi friends, good evening. So here we are starting off with the study session 7, that is news based strategies. So personally I am not very much keen on buying shares based on the news, but sometimes the news is so influential, so impactful that there will be a huge correction in the share prices, and I personally look at it as a very good opportunity to do fresh investments. Obviously, I always say that any opportunity should be considered only when it is backed up by strong fundamentals of the stock. Just because a stock has gone down, but the stock does not have a lot of potential, or for me, if the stock is not having good fundamentals, I would still prefer to stay away. Like one example I'm giving, Jet Airways trading at 850 was never a good deal for me. If Jet Airways for me is not a good deal, then for me Jet Airways is still not a good deal, even if the stock is now trading at around 250 rupees. The stock has fallen by as much as 600 rupees in just maybe a span of 3 to 4 months, or maybe close to 6 months. But for me, still, I don't want to put my money in that stock. Okay, so you need to understand. I'm not just talking about correction. Correction is important, but for those stocks which are fundamentally very good. Okay, so news-based strategy, I have written it. Not always news-based strategies are speculative or short-term. They need not be short-term. You can still invest for a long-term. And I would personally say that I'll take a lot of examples today, wherein I will prove this to you that these opportunities are one-time and they should be definitely capitalized on. I always insist you should wait for the right time to buy quality stocks. Obviously, I have seen a lot of people, a lot of my clients, a lot of my students who will pick up a stock close to its 52-week high. I personally don't prefer that approach where you buy the stock close to its 52-week high, because we form that kind of a perception that if stock is going up every day, it will continue with the journey. Actually, it's not like that. You should try avoid buying stocks at their 52-week high until and unless you have some very solid and strong reason for doing that. Okay, so you should always wait for the right time. All good stocks will give you opportunities some time or the other. Market is a mix of ups and downs, and all good stocks sometime or the other will give you an opportunity to enter. So if we look at the concept capsule 1, negative news is not always bad. Okay, there is a negative news, but you need to understand how impactful it is and whether companies will have enough measures to redeem themselves or to come up with the corrective measures. If they do have, then that should be looked upon as an opportunity. So I take this example. This is I think last year only it happened that Jubilant Foodworks, they had a problem in one of their so first of all, let me tell you, Jubilant, I hope you know, is the supplier of Domino's pizzas all across India. They are the company responsible for distributing Domino's pizza all across the country. They are owning the Domino's brand, right? So what happened is that in one of their outlets, a customer found some insects in one of the toppings, that is oregano. Okay, so I don't know, if I was in the place of this customer, I would have probably not even figured out if oregano is moving. So if oregano is moving slowly, it has to be insects. Okay, so they found some insects crawling in the oregano. Oregano was moving, and this news became big within a day, and the stock has come down by 400 odd rupees. The stock, which was trading at 1350, came down to 1075. I still remember I was taking classes in Ahmedabad at that time. Immediately, within no time, on InvestorWise page, we posted that even if there was oregano, there is insects in the oregano, I'm sure people probably, this is the statement I made, people probably will still stick to Domino's, and they will go to Domino's. All that they will do is they will carry oregano from their home. Maybe they will stop trusting the oregano of Domino's, but they will not stop trusting the taste of cheese burst pizza, which is supplied only by Domino's. Okay, so I gave a strong buy recommendation at around 1075, 1080. Okay, you might feel that he's always boasting himself. It's not like that. The thing is, when we give some advisory, okay, and if that clicks very good. There are times when even my advisory is not working out. It's not that we get 100% accurate results. But one thing is sure, that when I give some advisory, the stock has been tried and tested fundamentally. That is for sure. Nobody can point out in my stock that what you recommended is a piece of shit, or it's a crappy stock with no sound fundamentals. It's very difficult to pinpoint in my stock's recommendation. Okay, so yes, these examples become the classical all-time examples because they have done really well, and my understanding has turned out to be best, and that is what I feel I should discuss with my students, not to self-boast but to set examples in front of you. I gave a buy recommendation immediately in no time, and you wouldn't trust me, next day stock was up by 150 rupees. One bad incident can happen with anybody. That should not define the company or its reputation, or how hygienic the company outlets are, or their production houses are. We should not judge companies based on that. But again, when I gave a buy recommendation on Domino's, I did not give it just because the correction was there of 300-400 rupees in this stock. I looked at many other things. First is the business model. People in India can go to any extent to eat Domino's pizzas. Then I will look at their competition. What are competitions? I don't even recall any of them. Maybe Pizza Hut is the competition. Maybe you will say Papa John's, something like that. Okay. McDonald's, KFC, they are busy fighting among themselves. They are obviously not the competitors. So Domino's does not have a lot of competition in India, and people won't stop eating their pizzas. That's about the business. What about the numbers? Numbers are also supportive. 52-week high was 1900. At 1300 itself, the stock is very, very well priced. From there, again, if the stock goes down by 300 rupees just because of the small news that oregano had insects, I don't think you should have any reason for not buying that stock. So 52-week low was 990. Stock was almost trading close to its 52-week low. Book value is found at 80 rupees. That's a good book value. Obviously, price to book value is very high. Price to book value is very high. We don't prefer such a high price to book value. But then we should look at something more than that. That is, book value is nothing but made up of the reserves of the company. And more the profits, more will be the reserves. If I look at the profits figure from June 17 to March 18, company has done stupendously good to generate profits of 68 crores all the way from 24 crores. Huge jump in profit. Business of the company is simple to understand. You know Domino's is superior than its competition. Obviously, we will give a buy recommendation on the stock. Would you beat this? In last 1 year, the stock has gone up to 2600 rupees, after which it made a bonus issue. And I've written it over there after bonus issue in the ratio of 1:1. I've told this many a times. Because of bonus issue, obviously, the company will have its share half the price because of 1 for every 1 share bonus issue being done. So the stock is today trading close to 1450 rupees, 1400 rupees, which is as much as 2800 rupees without bonus effect. So stock has literally doubled in last 1 year. Okay, so this was a very good opportunity. So going forward, ever in future, if you have an opportunity where you find a very good stock trading very cheap, don't miss on that opportunity. I take another example from the food industry itself. The share is Nestle, which is a FMCG sector. Maggi, the FDA, the Food Drug Administrator, they found lead in the Maggi. Lead. Okay, so the lead is not good for human consumption beyond a certain range. This lead was found, and they agreed to that. They confessed that yes, we understand that there is lead, and we will going forward. We will try to cut down on the composition of lead in the Maggi, and whatever Maggi we have right now, in some crores they had the storage of Maggi, that would be destroyed by the company. That is what they did. From company's point of view, being an MNC like Nestle, that is what we expect. They are not going to compromise on the quality. Something goes wrong, they will definitely take corrective measures. They did that, but the stock lost a lot of value during the same period. From 7200, the stock went down to 5500. Again, I feel that was a very good opportunity to buy this stock. If you look at the fundamentals, the EPS is very, very good at 140 rupees. Book value is 355 rupees. From 2011 to 2014, the profits have gone up from 960 to 1185 crores. What is the best thing about this company is their return on capital employed. How much return company is generating on its invested capital. That is, invested capital is share capital, reserves, and long-term debt also. ROE is when you look at the return only for equity shareholders. ROCE, return on capital employed, is the return that company is generating both for equity shareholders and for long-term debt. 50%. That is a very, very good margin of profits. Okay, they're generating very good returns. They hardly have any debt. At KP Advisory, we gave a strong recommendation on Nestle, looking at its fundamentals and price correction. You would be amazed to know that today it is trading around 11,500 rupees. Yes, sir. There has been an increase of 6,000. Yeah, it has taken around 2 years' time to do this, but 6,000 rupees is the jump, which is more than 100%. That's the power of equity. If you pick right and sit tight, you will eventually make money in equity. That is a guarantee. If every time markets go down, you start panicking, मेरा शेयर कब चलेगा, मेरा शेयर नीचे है, मेरे पैसे डूब गए. If that is the kind of mindset you have, don't enter equity market. Put your money in bonds and sit back home. Okay. So I'll continue with concept capsule 2 in another video. Thank you.